Welcome back to the best prop for you trading floor. Today we are looking at gold once again, and we'll have a serious reality check on the charts. Despite the continued geopolitical escalation between the US, Iran, and Israel, headlines that typically send economists to the moon, and we did see actually that taking place with gold. Gold just did the exact opposite. After reaching 5,400, the upper Bollinger band, okay, the market dumped. We are down more than 5% today, and we have found support at the middle Bollinger band. And it looks to me like this is extreme profit taking, and of course, alongside a strengthening US dollar, our safe havens are, well, its status actually is being revitalized as it looks like it. So if you're trading a prop challenge, this is why you cannot blindly trade the news. You have to trade the structure. Let's jump into the charts to see if this is just a deep correction or the start of a massive reversal. Now let's look at the broader structure first. Okay, we hit major resistance of 5,500, which, by the way, took out, or we tested the open of this huge candle that we saw a massive drop back on January 30. Okay, let's not forget also that we've come all the way down to the 5K. Again, a very big psychological level. These two levels are very, very, very important. The other thing to take into account is that we have actually done a very deep correction to the 78.6 Fibonacci on the one side. We have stopped at the 50 Fibonacci, which is also the 5K psychological support on the other side. And if we look at it from the other perspective, from top to bottom, from bottom to top this time around, what we have done from a bullish perspective is we've actually pulled back to the 38.2 Fibonacci. So if we do lose the 50%, we can say the 5K as well. And then we have the 61.8, which is a dip. And then and then we have the 78.6, which comes very close to the lower Bollinger band at 4,700. Now, there is something important that we need to remember. We have to look at the RSI always. The RSI shows no momentum. And currently, although we have retested the median line, here momentum is still higher. Okay, this means that we could see a bounce indeed, but I think I would be calling a top at around 5,255 maximum. I'm going to get to that in the lower time frames as well. But for now, what I want to show you is that typically when the RSI after such a move is actually not showing divergence, what happens is we consolidate. Now, since we did the 78.2 Fibonacci retracement over here, which is a dip, right? What might happen, since we are looking at Bollinger Bands being flat, and when Bollinger Bands are being flat, then we see a move all the way to the lower band currently, since we topped at the upper band already. What happens is that we see a mirroring of that move to the upside. So there is potential that we're going to see prices come down to the 78.6. If that happened, and we'll have the first stop bottom down here, second here, and second here, you've got a potential pennant pattern that might play out. Okay, the other scenario apart from a pennant would be a continuation of that leg to the upside and then further downside, which would indicate a triangle, and a triangle would be a bullish continuation. However, let's not forget, above 5,610, the top could be literally in. But these are the two scenarios we're looking in terms of pattern. Okay, now what we want to do in cases like this, because this is a big drop, okay, and it could be a continuation literally. First, let's see where we are here, right? So if we do lose that level, we're risking further downside. Okay, but regardless, this is just a flag, right? But what I wanted to bring your attention to is the daily candle over here. Now, when we are in situations like this, we want to use our Fibonacci tool, go at the open and go all the way down to the low. Okay, and this is today's price action. We go down on the 1 hour and we'll look where we stand. Where do we stand on the 1 hour? We have an RSI in oversold and coming out, no divergence, well, kind of small divergence, that's why we see this upside. But importantly, we have a rejection at the 38.2 Fibonacci. This rejection, guys, when it happens, typically it suggests a further leg to the downside, and it's considered to be a pullback. So if it is a pullback, we're going to see further downside. This will eventually become a 5-wave leg, okay, which would imply, you know, the moment we go down here, we can have a double bottom and perhaps we'll see a deeper correction up to the 50 or 61.8 correction. But essentially what this means is that this could be a dead cat bounce again, okay, 38.2. If we correct higher, the chances of a dead cat bounce are going to reduce significantly after we break above the 50 Fibonacci and look for the 61.8. But to me, as long as this conflict escalates, dollar is going to get stronger, which suggests gold could actually move lower down. What we're going to do in this case, we do have supposedly the first, the second, the third, and the fourth wave now. So we're going to look at the 61.8 Fibonacci and the 38.2 Fibonacci. So essentially, our idea here is to look for a short position. Either now, you would place your stop above the 50, and you would place your take profit down around the 61.8. This is one way to trade this. Okay. Another way would be to just wait for the breakdown. Okay, and enter at the breakout confirmation. However, as you understand, down at this low, that would be very risky considering that we could see a bounce. Another idea for those who like to trade the reversion to the mean would be looking for a long position at the 5,030 or so, a stop below the 38.2 and a target at the 50 Fibonacci. You understand, of course, the risks in this particular case. We might not see a bounce up to the 50%. But one way or another, these are the two opportunities. So if you're looking for shorts, 5K might be your level, or 5,130 might be your level. With, of course, a trailing stop because gold can be quite volatile. So how we trade this at best pro for you? We prefer to be on the short side, okay, and we prefer to keep our stop tight above the close to the 50 Fibonacci, and to enter as soon as the 5,000 or so, because there could potentially be, after the first retest, another leg to the downside to accelerate this move. Do not marry a bias. The dollar is strengthening and institutions are taking profits. Respect the 5K level, okay, which we might have lost because we already retested it, right? And it will, of course, dictate the trend for the rest of the week, not just today. This is Best Pro for you. Trade smart, protect your capital, and I'll see you in the next breakdown.